Hi, good morning. You're watching The Market right here on 18 Now with me, Aisha Faridi, Avan Dabash as well in the studios. And today is going to be an IT day, it seems. That, seems like much of the negative was already baked in yesterday when the IT stocks were really getting clobbered down. And today, of course, we're going to see a recovery. But we'll talk about IT and it'll be lots of IT on the show in the next half an hour or so. But we've managed to eke out a gain for a third consecutive day. We've been in consolidation mode for the last 12 days or so. And thanks to Reliance Industries, we've been making a move higher. In fact, Reliance has managed to hit that 18 lakh crore rupee market cap club now. In fact, the auto index as well managed to hit a record high. And yesterday, what was chugging along was the two-wheeler names. A big move coming in on Hero MotoCorp. You had a big move coming on Bajaj Auto. And both those stocks propelled the Nifty Auto higher. Banks as well have not done all that bad, although it's been pretty diverse a view coming in on banks because you've not had participation come in from HDFC Bank or ICICI Bank. But in Axis and IndusInd Bank, they are the ones which have been chugging along quite nicely. So yes, we managed for a second day for the Nifty Bank as well to eke out gains. FMCG, of course, has been a bit of a sour spot. That continues its decline, which is now running into a fifth consecutive day. But yeah, Avan, today it's going to be all about IT. And it's been an inline set from Infosys. It's been a beat from TCS. Yes. And that will take care of IT stocks and we'll see a solid rebound because most of these stocks went in weak into its numbers.
Absolutely. And looking at that earnings fine print, as you said, let's start off with TCS. Then it has been a pretty healthy quarter that the company has delivered all in all, with their overall reported net profit coming in at 11,058 crore rupees. And that's been higher by about 11% on a sequential basis. It was down about 2.5% or so. The consolidated revenue as well this time around came in healthy overall. You also had the board approving a dividend that was of 9 rupees per share, EBIT margin at 25%, and overall their segmental growth as well on a sequential basis seemed to be steady, whether it was the consumer business, manufacturing segment, as well as the BFSI. In terms of the overall management commentary from TCS, they also acknowledge that as of now, they will see attrition coming down a little bit further. Sentiment has been the same. They said they can't really tell if they will see recovery by Q4 or Q1, but BSNL and the Europe business clearly led the charge. Even for Infi, it was steady margins despite the wage hikes this time around. In line is what the company delivered at 6,106 crore rupees, the EBIT margin at 20.5%, and the FY24 guidance on revenue was raised to 1.5 to 2%, with the operating margin guidance raised to 20 to about 22%. The management, though, did flag off a little bit of demand uncertainty, but the deal win strength this time around has been notable for Infosys. In fact, we have both the managements who spoke with us. Just listen in to what the IT bellwethers managements had to say on Q3 earnings.
There's no major change in the sentiment, like at least there's no on the ground. And am I disappointed? Yes, like we definitely want to grow, like we want to grow faster. And we expect that at least in the our deal wins are good, as NG has pointed out. We are winning deals. So we're hoping the medium to long term it will recover.
Okay, point taken. NG, so are you hinting at $9 to $11 billion going forward in quarterly TCV or 8 to 10? And this year, of course, the double-digit growth is difficult, but are you ruling it out for FY25 as well? Because at least the base is a bit more favorable. And if the pickup does happen, you see a potential, a realistic potential of double-digit growth in FY25?
Our goal is to go and win every opportunity that comes our way. So I don't want to put a number now, 8.1 or 5 points.
Of course, everybody wants to do the best, but realistically speaking, what do you...
I think it's good. As I said, we are extremely happy with the performance of our sales team. And 8.1 billion is in this quarter especially, it's a great performance. The qualified pipeline looks good. And this quarter, there's no mega deals, which means that mega deals are still maturing, right? So I think we are happy where we are. And I think, wait to hear from us more, right?
Any word in terms of double-digit growth possibility in FY25?
I mean, as I said, look, this business, opportunity is there, demand is there. There will be constraints like what we are facing today, and there are uncertainties. So we have to weigh in all of this and then see whether we can improve our market share in this kind of situation. I think we are happy that we are increasing our market share wherever it presents ourselves. And overall, compared to last quarter to this quarter, I think in select areas we have improved our market share. Our focus is going to be increasing our market share in this kind of conditions.
We see the outlook in essence quite similar, but the guidance is tightened. That's how we're seeing it. Based on what we've seen in the first 3 quarters, where our growth has been 1.8% in constant currency terms over the previous year's 3 quarters. And that's really all we've done with the guidance. At this stage, we have not seen any different behavior from clients. Typically, as you know well, Q3 is a quarter with large furloughs and other end-of-year holidays, and that we've seen continue. We've not seen either an increase or either a decrease, so the same sort of a view.
Well, Infi TCS, and just in case you're wondering what you're going to see on Infosys, which by the way went in pretty much around the day's lows into its earnings, or rather just before market close, and then you saw that big spike up coming in, taking the stock all the way to the day's highs, pretty much around that 1520 mark where it opened in trade. 1494 is what the stock saw post-adjustment. So big move is what you can expect in Infosys and TCS, given that the commentary is much better. The fact that the stock, or rather the numbers overall have been in line, you can see a good reaction there, although TCS went in positively to its numbers in any case. But Infi ADR as well has seen quite a jump up. Overnight, it's jumped up about 3% or so. In fact, talking about global markets, let me take it across to Vinny as well. While it's been a quiet handover across the globe, and this morning the GIFT Nifty is indicating a mildly positive start. But Vinny, what's the global commentary like? Further escalation in geopolitical tensions as well overnight, and a jump up in crude too.
Absolutely. So yes, jump up in crude, escalation, geopolitical tension. But we have Peter Schiff who's highlighting in terms of commentaries. And this is especially coming in the hotter than expected CPI data. So he said that, you know, if everyone thinks inflation is behind them, then no, that's not the point that he's making. There are still concerns around inflation. And he said that one actually needs to figure out the fight against inflation because it's not yet over. And seems like, you know, given that hotter than expected CPI data that came in for the US markets, seems like, you know, we've almost lost the fight there in terms of fighting against inflation. But on the other hand, we have commentary that is coming from the Fed's president of Chicago, Goldsby, who's highlighting that in terms of 2023, if one had to put in a name in terms of Hall of Fame of the year, that would be the falling inflation, leaving some door room open in terms of Fed cut interest rate that one could start expecting. But yes, key data points yet need to be kept in mind, whether the recent easing is actually working out in terms of the pricing pressure. How is that working out? That's surely a key data point that he's keeping an eye out on. Other than that, you know, let's talk about Federal Reserve Bank's Richmond President Bhasin, who's highlighting that he reiterated that he is still looking for more evidence that inflation is headed towards the target of 2%, which Federal Bank has kept. So yes, Fed Bank, I beg your pardon, Fed Bank has kept. So yes, the 2% goal is still something you're watching out for, and also data points. So similar commentary coming in from both these Fed presidents there as well. Lastly, we have Christine Lagarde from ECB, who is highlighting that, you know, she's not going to stop her fight against inflation, will be continuing on that front as well, and will continue to do her job till inflation doesn't come down to the level that they're expecting. So a lot of commentary on the inflation front that has come in overnight.
All right, there you have it, all the global commentary. Vinny, thanks very much for summarizing that. Let's move right on to Technical. Zen and Kunal Bothra joining in on the show. Kunal, hi there, morning. Let's get a sense as to what you made, given the fact that it's been in consolidation mode for the markets. Maybe Wednesday's move was just a flash in the pan, and now do you think that it's just consolidation tight range for us?
Yeah, so I think so far in the last 5-7 days, we've seen the index in a 300-point range. Even after Reliance up move, I was actually expecting that maybe the Nifty would probably finally cross back above the 21,800 mark. But we had a touch and go movement towards the 21,700 odd levels yesterday. But then no real signs of momentum. And I think one of the major reasons for that is because the bank Nifty is still underperforming, and most of the private sector banking stocks, the heavy weighted names over here, I think they are significantly underperforming. There is no major sign of strength emerging for these stocks. No follow through price action even after a single day uptake for these names. I think that's a concerning point for these names. Also, I think on the OI front, we've not seen any major short covering on the bank Nifty as well as on the Nifty futures. In fact, more keen towards the bank Nifty futures after that single day of 25% jump in the OI for bank Nifty. So that also indicates that maybe the traders who are holding on to the short positions continue to do that. The premiums have dropped down to almost 130 points for the bank Nifty. That's also one of the other concerns, that maybe over the near term we could probably continue to grind for both the indices Nifty and bank Nifty.
Okay, and I think today key would be the move that you're going to see within the IT pack led by TCS and Infosys. And Kunal, not as much TCS, and I'll come to your stock specific picks as well in just a bit. We want to discuss these two names considering they're going to hog all the limelight this morning. But Infosys, what an intriguing chart, right? Just before market close, it was at the day's low, and then that big spike up, taking it, I think, to the opening highs.
Yeah, it went to the intraday highs for itself. But again, intriguing chart. The stock in the last 2-3 weeks has just gone through a mild correction. The IVs had actually popped up to almost 28.5 for Infosys, and I think over the last many quarters of results, we've seen the IVs somewhere around 22%, 23% for Infi. So which means that there's some sort of expectation which was suddenly built up into the stock, going into the results, yesterday. So I'm expecting that if the stock opens with a gap up, it may not be a mild or a tepid gap up, but we may actually see a stronger up move for the stock.
Yeah, indeed. The overnight action on the ADR already seems to be suggesting that. But Kunal, what about your stock-specific ideas?
So I'll go with the two differentiated names over here. First would be a buy on actually Vedanta. That's a stock which yesterday would, is confirmed a breakout for itself on swing charts. Metal stocks, even though they've not made a very strong comeback as such, but in the charts for Vedanta indicate that the stock may make a mild comeback over the near term. 288 as a target for the stock, and stop loss could be kept at 271. And AB Capital is something which I've been bullish on. That's a stock which yesterday gave a price volume breakout, coming back above the 200 moving average, as well as a multi-month high above 180 plus mark. So would suggest a buy with 190 as a target, stop loss at 174.
Okay, there you have it, your top trading recommendations being flagged off by Kunal. Let's move right on then, and Sumit's here to dissect some stocks that are in news. And let's begin then with talking about those airlines, because the airfares have fallen in a seasonally weak quarter.
Well, if you see, in fact, the discount period for aviation sector has now started, given that Q4 is a seasonally weak quarter. Indigo, Air India Express and Vistara, all three companies have announced their discount schemes so far. Now, this is because obviously Q4 for any airline company is seasonally weak. Now, even if you see the air traffic trends are suggesting that so far for the first 10 days of January, if you see the average domestic air traffic, daily average domestic air traffic stands at close to 4.29 lakh on a daily basis, while this number in the month of December was close to 4.46 lakh. So this clearly indicates that air traffic has been on a falling trend for the aviation companies, and they are trying to revive it by giving such schemes and discount. Now, coming off from a strong Q3, with this initial trends at least indicate that Q4 again could be a weak quarter for the airline companies, but we still need to watch out how further the trend pans out for them, because it's still very early, but these are what the early trends are suggesting. Now, if you see the air ticket prices, now we checked air ticket prices for the 7-day forward and the 2-month forward for the top 20 routes in India, and prices have fallen for 15 out of the top 20 routes in India so far. Now, routes where the prices have fallen the most are the key routes like Delhi, Kolkata, Patna, Delhi, Delhi, Bangalore, Delhi, Pune, Bangalore, Delhi. Now, prices have fallen anywhere between 13 to 23% for the top 5 routes, and for the 2-month forward also the decline has been anywhere between 11 to 20 routes, and these are the major earning routes for any airline company like Mumbai, Kolkata, Delhi, Mumbai, Delhi, Bangalore. So these are the key routes for any airline companies which are more lucrative, and prices have fallen anywhere between 11 to 20% here.
Okay, that's airline stocks once again in focus. And Kunal, you've seen some activity build up as well, right, in Interglobe Aviation? I think it's had a few good days this week. Yeah,
in fact, it's one of the better performing names, making a fresh high, breaking that 3,000 mark. Even in that COVID period, we've seen Interglobe Aviation not falling as much, and outperforming. Then there was a period of a bit of choppiness or volatility. But in the last three odd months, it's done pretty well for itself, breaking past about the life highs, showing some good volume patterns for Interglobe Aviation. And of course, compared to SpiceJet, which is a stock which has been extremely volatile, this stock has done exceptionally well.
All right, there you have it. That's the view coming in on some of those aviation stocks. Indeed, that has been a pretty smart move for SpiceJet in the last week or so. But interesting as well to dissect, Samit, what exactly the mutual fund activity has been, what they've bought and what they've sold in the month gone by.
Well, if you see stock-specific action, what we have seen on large caps specifically, if you see Zomato and Gale, that mutual funds have been continuously adding for the last 3 consecutive months. What I've been tracking is that mutual funds have been increasing their exposure to these 2 counters. And when it comes to sell side, it's basically what, be it large cap, mid cap or small cap, mutual funds have been exiting from PSU stocks. Now in large cap, if you see, it's BL, NTPC, Indian Oil Corporation, all these companies had run up in the month of December, and mutual funds have used that as an opportunity to exit these counters. Now HDFC Bank, that we have been continuously talking about being one of the cheapest, being cheaper in valuation, being an underperformer, still mutual funds have been selling that counter as well in the month of December. Among mid caps, Vodafone Idea is one stock that mutual funds have again been adding, though there is no rationale to it why they might have been adding the stock. But again, on the sell side, if you see, there are in the top 4 are PSUs, that is PFC, HPCL, NHPC and REC. Mutual funds have been continuously selling these counters, and despite the 30% run-up that we had seen when it comes to SAIL and GMR airports, mutual funds have not shied away from adding more shares to these 2 counters. And in small cap, if you see, Piramal Pharma is one stock. Now this had been an underperformer and is one of the cheaper in valuation in the pharma space, and mutual funds have been adding this counter. Hoodco, that stock had run up 47% in the month of December, though there was some news specific reason for that run up, and mutual funds have also added more shares in that counter. On the sell side, it's Suzlon that mutual funds have been continuously selling for the last 2 consecutive months, and NLC India, that stock was up around 49% in the month of December, and mutual funds used that as an opportunity to exit that count in the month of December.
Very interesting analysis there, and it's an intriguing list of buy as well as sell, Samit. Thanks as always for flagging that off. In fact, we're going to pick up that list and we'll have Sanjiv Bhasin join in after this very quick break.
Welcome back. Still tuned into First Trades. Let's get you a sense as to which are the stocks that are in news. And yesterday, without a doubt, Polycab continued to remain in the spotlight, grinding lower as the IT department woes continue to weigh on the stock. In fact, Axis Capital, they've gone ahead and cut the target price on the stock, citing lower margins. They've also lowered the EPS estimates. Let's understand a little bit more about what the situation is and what brokerages have to say. Lisa joins in with the heads up. Lisa?
Yes, for now, Axis Capital is the only brokerage that they have released a note on Polycab, and though they have maintained an ad on the stock, they have cut the target price to 4,300 from 5,809 earlier. Well, they have cut the target price to factor in the uncertainties, of course, due to the IT raid being conducted, and also they have cut the EPS estimates by around 2 to 4% to factor in the disruptions due to the IT raid in FY24, and also the lower cables as well as wire margins. Now, they believe that a multi-re-rating is underway, and this is till the charges are proven otherwise. And for now, they do not have sufficient information, to say what is the time for the final judgment if Polycab decides to contest the charges, and also the scale of impact is not known. What will be the penalty charges? What will be the charges, the tax evasion charges for now? And along with that, simultaneously, Polycab also in their press release, they stated that the company have not received any official letter from the IT department, and they have vehemently denied any tax evasion and intends to appeal against the same if the charges are levied against them. Well, if we look at the last 3 days movement, Polycab, the market cap has, the erosion has been at around 22,000 crore, and not only Polycab, it has rubbed off on the other players as well. KEI is down around 10% in the last 3 days, Polycab 28%, RR Cable is also 5%, and along with that, even the valuations have fallen. For Polycab, it was 45 times on 9 Jan, and now it's trending at around 33 times, and same goes for the other players as well. So Polycab will be in focus today on the back of the new update coming in from Polycab that they have denied any allegation, and they have not received any demand notice from the IT department as well.
Right, Lisa, we'll leave it at that. He has been quite beaten down, the entire wires and cable space, led, of course, by Polycab. But let me take it across to the TCS headquarters and hand it over to Anisha. She's got the TCS top brass with her. Anisha?
Oh, well, yes, I have Krithivasan, the CEO of TCS, as well as NGS, the CEO at TCS, joining us to talk to us about Q3 and, more importantly, declutter the myriad of pulls and pushes that we are seeing in the sector right now. But, gentlemen, since this is the first time we are speaking in 2024, let me take a moment to wish you a very happy 2024 to you and the TCS family. And let me begin by just asking you that. How do you think, Krithi, 2024 will be different for the sector and yourself versus 2023?
See, if we look at our order book, okay, the order book has been very positive. So it gives us a confidence the clients are still thinking long term, still thinking strategic programs. They are trying to improve more, get more digital transformation, and there is more technologies like generative AI coming into play. They would want to get more benefits, products, new services coming out of all these things. So we are quite optimistic in the medium to long term. So that's a major difference for us compared to how 2023 panned out.
Okay, so medium term is optimistic.
Medium to long term, yeah.
Fair, medium to long term is optimistic. But let me take a leaf out of that and discuss client budgets. Because the last time we spoke, you said that you'll be better placed in January to talk a bit more about it. Talk to us about how things look right now.
We are not in a position to call whether the budgets have improved. But again, we kept mentioning yesterday, we also moved away from that, reading too much into the annual budgets.
Okay.
And our clients are also, because everyone wants to be agile, the decisions are taken almost on a quarterly basis based on the situation. So we keep very close watch and work closely with our clients and make our decisions, and we don't read too much into these annual budgets anymore.
Sure, and just before I come to you, NGS, let me wrap that point, because the reason I ask you about client budgets is at least it gives us some sort of visibility, you know, a guiding beacon of sorts.
We don't have that visibility as of now.
Fair enough. So, NGS, let me bring you into the conversation, and I want to talk about the BFSI vertical specifically. This time around as well, there was another decline. In fact, it was more pronounced this time. Are you confident to call it the bottom, or do you think it will get worse before it gets better? Will Q4 see a growth in BFSI or not?
Good morning and Happy New Year to you and your viewers. I think the way to summarize this whole thing is we are enjoying the uncertainty, right?
Really? You're enjoying the ride?
And, BFSI, as we called out yesterday, I think we don't see any aberration per se in our client portfolio, right? There are a couple of large engagements in BFSI we completed during the quarter, and that has resulted in some amount of weakness. And seasonally, almost in every market, BFSI segment has furlough impact. So that has really, whatever the minus 3% that we talk about this quarter is attributed to that. And, sectorally, in our client portfolio, we don't see a weakness, and we should be able to do well in the coming quarters.
So a growth coming back in Q4, broadly speaking, or at least not a decline of 3%?
We are focusing on that. We are completely focused on that, and we would like to deliver growth in the BFSI segment in the coming quarters. That will set a good exit rate for us moving to FY25.
Sure, point taken. I also wanted to discuss North America specifically with you gentlemen, because that's seeing continuous decline. I think it was the fourth quarter of decline that we have seen this time around. What do you think will mark the turnaround there? What are the monitorables or triggers you're watching out for? And I ask that because if it was about Fed commentary, that has changed a bit. Are you seeing any difference in the ground? Either of you can take it.
We are not seeing any major change from what we reported last quarter. Our belief is once there is a greater client confidence on where the economy is going, and there will be greater confidence in then spending on new transformation programs. But at this time, most of our clients are in a wait and watch mode and conserving cash.
I agree with the sentiments have to turn around a bit. But
and they haven't as much yet.
We haven't seen any, it hasn't deteriorated from the last quarter, as I said yesterday.
Always a glass half full guy,
which is a good news. Which is a good news. But overall, I think, it will turn around is my feeling, because manufacturing is doing well, life sciences, healthcare is doing well, the power and utility sector is doing good in North America. There is no reason why the other sectors should not do well in the coming quarters, right? It's an election year, and people are, looking at the early trends that, Iowa caucus is going to happen soon. So I think some of these things will pan out as we see it, and some positive news will have to come for these other segments.
Let's see and wait for that positive news, but there has been enough positivity around UK because that continues to deliver good growth for you, even though the growth rate has come off a bit from 10% to 8% now. You see this strength continuing in the UK market, at least for the immediate term?
I guess so. I think, the pipeline that we have looks good, and we are working on some good opportunities in the financial services as well as the energy sector in the UK. Europe has nicely turning around, and then over the last few quarters, it's been moderated, bottomed out, and this quarter we have seen some green shoots. Actually, Europe has grown for us. So I think Europe and UK should do well in the coming quarters for TCS.
Okay, so that's good to hear. Some green shoots in Europe, and UK will continue to deliver well. But the other point that I want to probe further with you, Krithi, is the revenue leakage that we have been talking about over the last couple of quarters, which is basically the differential between the ramp up in the new deal wins versus the kind of old billings. Has that gap narrowed at least? Is there any improvement in that?
It's more or less, at least it is not like NGS said, it's not worsened, which is good news. And as our clients gain more confidence as we go into the year, we should see some narrowing of that gap.
Okay, so hopefully a bit more of narrowing going forward. But NGS, this time around, there was a bit of a slip in the deal wins as well. And I call it a slip because you have spoiled us with that $10-11 billion kind of numbers. And the guidance that you gave in terms of 9 to 11 billion quarterly run rate. But what I want to point out is over the last 3 quarters, we were seeing that the deal win momentum was strong, though the revenue was a bit slow. Now that deal win momentum is also slowing, should we read too much into it, or do you think there's only a bit of a timing gap right now?
I think you should not read too much into these numbers, number one. But I think, the way that we look at it is, last 12 months basis, if you look at the deal wins that we had, and on a year-on-year basis, that we have grown by 11.9%, right? Which is actually a good sign. And this $8.1 billion of total contract value that we have signed comes after 3 good quarters of 10 billion plus, right? So from my perspective, I think 8.1 is a very good number, and it comes without any mega deal support, right? Which means that it's a very broad-based, a lot of small to medium-sized projects, and all of that we should execute it, in a shorter time frame than a 5-year time frame. Typically large deals tended to be over a 3 to 5 year time frame. These kind of deals that mark $8.1 billion will all get executed in, let's say, 1 to 3 year time frame, which should augur well for our growth in FY25.
And in fact, this is the point I want to discuss more. When you say that the mega deals are lacking, at least in this quarter, is this the entire nature of the deal wins which is changing? People and clients are looking at more shorter duration deals as you talked about, or there's enough pipeline of mega deals as well?
No, it varies, and our pipeline has certain large mega deals.
Okay.
The decision-making cycle of mega deals, as I've always explained, it varies about 12 to 18 months, right? And we are in good stage in some of those large deals that we are pursuing. But as I said, $8.1 billion is no mean achievement. I would like to compliment my entire sales team, right, for achieving that in this quarter. Yeah.
Okay, so 8.1 billion is good and you're complimenting a sales team. But, the other point that I want to discuss with respect to the deal momentum is the fact, in terms of the various verticals, how is it panning out? Could you break it down for us in terms of what BFS has done? What are the other segments doing in terms of the deal wins?
Anisha, we gave out the numbers yesterday. More or less all of them have done well. Like compared to the previous Q3, all of them have done well. There's a good improvement, but like NGS said, you cannot look at the deal wins in the same lens as revenue. Like it doesn't follow the same revenue trajectory. because there is always certain amount of lumpiness, there is a timing issue. You need to look at over a long period of time or last 4 quarters how the deal wins have been, which is very strong. And this quarter, like we said, it's not aided by any mega deals because mega deals tend to be lumpy. It's all come from mid-sized deals. So we are very happy with what we achieved in terms of deal wins.
Sure. And NGS, I wanted to get a, glean into your experience and ask you that historically, how has it panned out when there is this extended pause of sorts on client budgets? Is there a sudden pent-up demand that follows, and is that what you're expecting for FY25 then?
Normally it happens like that, when basically, budgets are intact. They're a bit cautious about releasing it, waiting for the directionally, where the market is going, where the economy is going, the consumer sentiments, how it looked like, and then whether how the mortgages are doing, how the real estates are doing. Some of those economic indicators will play out. And in an election year, they are all very important. And politically, what direction the markets will take, right? And whenever that happens, generally, there'll be an uptick, and sudden uptick at that, right? But having said that, some of the projects that customers have initiated in terms of moving workloads into cloud migration, cloud transformation, as well as embedding artificial intelligence related services into those projects, they are all continued to be uptick, and they are not holding up any budgets with respect to those executions, because it's kind of, they've started it, the earlier they finish it, better it is for them. If you pause, and then it's going to take more time, more cost for them, right? Likewise, like Krithi explained yesterday, some of the projects of cloud-related projects that we started 2 years or 3 years ago, at that time, the Gen AI and AI-related technologies and architectures were not well defined. So there is a lull in that, saying that, look, let's step back and see whether we should tweak those architectures so that, those things will, currently we are doing something like that, architectures getting redefined so that further acceleration on that will happen in the coming thing. But I don't see anything, fundamentally wrong with respect to the IT spend. And as we always said that, look, more and more of business is getting embedded into technology, and we should see the demand pending up.
I just want to scratch that AI point further, but before that, you very carefully dodged my question yesterday when I asked you whether there'll be double-digit growth in FY25 or not. So let me try and reword and make it easier for you. Do you think at least FY25, the growth rate will be better than FY24?
Absolutely, yes.
Okay, so at least that's the...
Yeah, otherwise, we are, I don't know why we should exist, right?
No, I mean, you can't help if the demand environment goes awry, right? But, so you're as confident about double-digit growth as well then?
I don't want to give such guidance, but then I think as a management team, we are extremely focused on getting back to growth. And at that, we would like to see a very broad-based growth across markets and across verticals. We have a very passionate team, and pipeline looks good. All are indicative of a better FY25 than FY24, which is what we would like to see, which is what we would like to accomplish.
I think that's an important statement to mark, that FY25 at least is going to be better than FY24.
Absolutely.
But
Absolutely.
Artificial intelligence that we are talking about, and you talked about how 4 of the projects have actually reached the revenue stage and you are seeing some sort of improvement there. Could you help us, get a bit of an insight in terms of what's the size of these deals, and more importantly, what is the nature of these AI deals? What's the client use per se, or business use that, clients are looking to tap into this AI opportunity for?
Anisha, I explained yesterday in another call, I think. So, first, these deal sizes per se are not material. What is material is that more and more of them are getting into production. And so people will tend to use it, see what is the real life usage, how people are benefiting from it. So, and then it will start a whole slew of projects moving into production or more new experiments happening. And in terms of projects that we explained, that broadly we categorize them in 3. Like one is what we call assist. Just summarize all the data. Based on the summarization, you ask a question, it says what's going to happen. That's what most of us ask on using. The second is what we call augment, right? Help you in doing something when it works along with you like a co-worker. The third is helps in transformation. So these are the 3 broad categories of projects that that's the way we categorize the programs or projects we do in generative AI. So you see more of them happening in the assist phase here.
Okay.
So, and also the more value will come as you move from assist to augmented transformation is when more and more value will come. But for that to happen, we need to experiment, get used to assist before we go into augment and transform. So that's where we are.
That's interesting to hear how that is panning out. But the other trend that a lot of us are talking about is GCC, or the captive units that a lot of your peers or the upcoming peers are setting up in India to tap into the talent here. How big a threat it is, because the pie of the deals is the same or shrinking, but the competition is just increasing.
We have been explaining this in the last few quarters. One important aspect we believe is most GCCs or most of our clients who set up GCCs in India are doing them for work that they normally will not outsource. Okay. The outsourceable work doesn't go into, there could be some amount, but most of the intention is to do some work which cannot be outsourced. So our share of the wallet, our addressable space itself is not shrinking in a big way. And second, this phenomena is been there for long, like we talking about it. For instance, like if you take a financial services industry, everybody has been having a GCC for so long. So yes, there will be some impact, but is it material that we cannot mitigate? No, like it's not a very material impact at this time.
Okay, not a big material impact, but what did have a material impact this time around NGS was the BSNL deal and the kind of ramp up that happened, and of course the support it gave to the top line growth. My question to you is, going forward, will there be a further ramp up in the sense that there will be acceleration in terms of billings, or there was some bunching up or front loading that happened in the quarter gone by?
No, we have just started to deliver in small chunks of radios and installing those 4G, 5G related equipments and providing services. It should, we have a plan in terms of ramping it up, and then I think typically it will follow this bell curve pattern, right? We have started at the lowest of the bell curve now. Slowly it will go up, and then over the next 4 to 6 quarters, it will come down, and we would finish 100,000 sites of installation and commission that network smoothly. And post that, I think we'll have to support BSNL with the maintenance and operations of that, and keep optimizing the indigenous network that we are rolling it out for them.
Sure. So overall, you're saying next 4 quarters is when we'll see a bit of a peaking up. But before I wrap up, just a couple of quick questions. In terms of Q4, the furloughs, do you think are going to be normal, or is it going to be a bit more extended this time?
Generally, it's about 2 to 3 weeks of furloughs in Q3 and about a week of furlough in Q4.
Similar
yes,
number.
I think we are experiencing it the same
It's
thing.
been similar like last year.
And lastly, if I had to ask you to rate the demand environment from 1 to 10, 10 being the best, where are we right now? Give me a number and no qualitative statement this time.
I would say we're around 7.
Yeah, could be between 5 and 8.
That's such a broad range, Sanjiv,
No,
but at
depending-
least I'll take 7 there as the indicating factor there.
7 on an average, but there are some verticals, maybe it's 5, some verticals, some markets it is 8 or even 9, right? So on an average, I think 7 is a good number.
Okay, on that note, I'll let you go, gentlemen. Thanks so much for making time and speaking with ET now.
Thank you so much,
Anisha.
Anisha.
With that, it's back to you guys.
All right, and I think we got quite a few interesting headlines there from that first conversation. Anisha, thanks for that. I think the fact that it is just going to improve down the line in terms of the overall environment, it's quite optimistic in the medium to longer term. And yes, the management saying that the order book is looking positive, indicating that they are clearly thinking long term. They would like to deliver strong growth in the BFSI segment going forward, talking about how the deal pipeline as well is looking quite promising in the UK. They're working on opportunities within the financial sector as well as looking at energy, and was as of now saying must not read too much into the deal win numbers, but they are saying that there will be $8.1 billion, most of that deals that have been signed that will be executed in the next 1 to 3 years, and all of that will augur well for their FY25 revenue growth. Their budgets are intact. Cloud migration, cloud transformation, AI adoption, all of that is seeing an uptick according to them, and that's the view really coming in from the management of TCS. In just a short while as well, we will be joined by Mr. Samir Seskaria as well as Milind Lakkad of TCS. So stay tuned for that at 8:45 in just a couple of minutes from now. But until then, Kunal, let's just dissect the charts then of a TCS. Just, looking at the year gone by as well, what we've witnessed at 37.35 with the strong set of numbers, what's the chart looking like?
So far over the last couple of days, we've not seen any major change in terms of the volumes trends for TCS, which means that the stock is going with a bit of a tepid expectation going into the results, and I think that's what the price action should be over the next couple of days. I would actually believe that the stock could probably get into a range bound action. Now the important support for TCS is around the 3600 mark on the spot levels, which is a good 4% approximately for the stock from yesterday's closing. Now if that level is not breached, I would actually believe that post the next couple of days of maybe a tepid sideways to slight uptick for the stock, we could actually be seeing a possibility of the stock breaking past about the previous highs of 3,900 and even trying to claw back to that 4,000 plus mark. TCS is only 7% off from its 52-week highs as compared to other large cap names like maybe Infosys, which is down some 23%. Wipro is down more than 30-35% from its previous 52-week high. So that's where I would believe that TCS has that slight edge. But because of that low beta nature of the stock, I would believe that the movement could be a bit more tepid.
All right, fair enough. Let's take it right back to Anisha, who joins in with her next set of guests and ready to fire away with lots of questions, I'm sure, Anisha.
Oh, well, yes. Let's see whether I'm able to put these guys in the, corner as well and get some more details or not. But I do have, Samir Seskaria, the CFO, and Milind Lakkad, the CHR of the company, joining me. And let me start by talking about the number which is making the headlines across all brokerage notes, and that's the margin resilience that we have seen. Very strong show. The exit rate, which was expected to be 25%, has already been delivered in Q3. But now you've raised the expectations. Talk to us about when are we reaching that 26% mark?
So I think delivering 70 basis points in this quarter on back of 110 basis points in the previous quarter is something which we are very happy about. And we don't give guidance, but we'll be happy with the momentum which we are seeing. And we stay focused on disciplined execution and operational rigor.
Oh, well, yes, but do you think the risks now are more towards downside in terms of margins, or do you see it only headed higher from here on? Because, Q4 is not seasonally weak, doesn't have a wage hike impact, so it should only trend higher, right?
If you look at it from an overall perspective, a quarter doesn't matter. Overall, if you look at the calendar year, it will have its pluses and minuses, and it's a portfolio which we need to manage in terms of we have certain levers and we'll have headwinds, and both need to be managed. Business continuity in terms of how the growth also pans out will have an important factor in terms of how margins will play.
Sure, and I'll scratch that point on levers further with you, but let me talk about the management of headcount right now and not just the cost management. In terms of attrition, that has come down significantly now. It's around 13.5% thereabouts. Do you see further room for it to contract, or this is a more steady state number that we should look at?
I'm very happy with and satisfied with the attrition number we have. People are the primary assets for this organization, and everybody has made a significant effort to get there. 13.3% is in a comfort range. Will it go down further? Maybe. The answer is, I think, mostly yes.
Okay, mostly yes. But the other thing, Milind, everyone is talking about is how you managed to retain the mid and the top leadership, because your peers, and I don't want to name them specifically, but we all know that there has been a slew of exits that have happened at other companies, whereas at TCS there has been a steady ship. What do you think you're doing differently?
We are not doing anything differently. It has been like this for years and decades, and that is what differentiates us. That is the culture of the organization, the ethos and the sense of larger purpose holds us all together. There is no specific action which I have taken in the last 3 years which is any different than what we have done in the last 10 years. So I think this is something which is within us. So, and that differentiates us.
Well, I think that's the legacy, the pedigree that you're getting the benefits of right now. But talking about those levers, because the subcontracting cost has come down, I think around 8% or a little lower than that already. How much juice can you extract further from that? And even in terms of utilization and productivity gains, there has to be some sort of capping at a level. Do you think you've reached that level now?
So, as we have always called out, our long-term cost structures are aligned for us to operate in the 26 to 28% band. And it would have a combination of levers. The cost structures will depend on not only productivity or realization, the leverage, or in terms of pyramid, etc. We have been tapping on productivity better, leading to and utilization. This time productivity as well as realization has helped us on an overall thing. Coming to the question on the subcontractors, see, it was the demand supply mismatch and travel restrictions, etc., which caused it to peak. It peaked around almost near to 10%, 9.2 or 3 was our peak. We have brought it down to 6.1% now as a percentage of revenue. And depending on how the business environment continues, we can tweak it. That's the easiest lever to tweak, because you can up it or down it basis. The contractuality of that is not as high, and that's the flex capacity which we get.
Is there a lower end which has been maintained over a, let's say, historical average in terms of subcon cost as a percentage of revenue?
You shouldn't look at it from that perspective. Yes, at a point of time we used to operate below 5% years ago. It is about the business mix and how much of how the environment is going on. I wouldn't cap it at a number.
Sure. But talking about the business mix, this time what supported the growth was BSNL deal to a large extent. And the street was worried that it's going to be margin dilutive given the nature of the deal. While I think it was a bit dilutive, we've managed it with the other gains. Going forward, as the deal ramps up, what do you expect the margin trajectory and contribution from BSNL deal to be like?
So, whether it is on the top line or on the bottom line, we are happy to take it as it is. It's a strategic deal which we have taken, and it's more, the deal is towards nation building, and it showcases our capability, unlike anyone else, to deliver such large complex programs, specifically on an emerging technology. As I'll not go into deal specific revenues or margins, but as a portfolio, like I talked about last time also, we would look forward to, we ask our portfolios to manage margins at their level, and overall also as a portfolio is where we'll try to optimize and drive efficiency.
Okay, fair enough. But Milind, what about the overall headcount decline? I'll just put a couple of points what naysayers are talking about, that the headcount decline is not only because of the business demand being a bit weak, it's also about the AI impact coming into the picture, the thing that people were fearing to begin with. Would you give any credence to that? Do you think this is anything to do with generative AI and how that's expected to hog into the jobs of people?
Nisha, I have been telling for last few quarters, I think we have made a significant investment in people in the last couple of years. Some of that is paying off now. That is one element. Efficiency of execution, like what Samir said, is another element. Which is what is primarily resulting in the headcount which you are seeing. Gen AI in the future may have some impact on the overall workforce, may not be from a volume standpoint, because people will end up doing something else, and not the job description will change, and not volumes may not change. So this reduction that has happened has got only to do with those two elements, and not to do with anything with Gen AI at this point.
Okay, but the headcount decline pace has been close to 5,000 to 6,000 now for the last couple of quarters. Is this something which will continue for the next 2 quarters, the decline of, let's say, 6,000 per quarter?
I will not be able to quantify,
sure,
but I will not be surprised if it is negative.
Okay, but we started off the year with the assumption that there will be 40,000 fresher hires, which is usually the case that you do. What have you done in the 9 months gone by?
Every quarter we are hiring. We basically onboarding all the freshers which we hired during the year, and that number is significantly high and not very different from what we used to do in earlier years. So that is going on. That is going on. They come in. Our talent, which is there for a couple of years now, from the talent we hired, they have gotten deployed in the last 9 months. So I think all of that together is contributing to where we are today.
Fair. But yesterday, Samir, in the press conference, we were talking about how market share of the company is also improving a bit. I want to understand from you, is it coming in with a bit of a stiff competition and pricing pressure? Because as we were discussing earlier as well, the pie is similar or shrinking a bit, but the competition is only increasing. Do you not have to twist yourself or, in terms of the margins a bit in terms of pricing of the deals now?
See, competition has never been easy.
It's getting tougher. It's never been easy, but it is getting tougher.
It's always been the case. Pricing environment, we believe, are stable. From a margin perspective, we have always said, or does it impact margins? Growth with profitability has been our mantra, and we'll never, give away one over the other. It's a combination of both, and that is how our businesses operate on. And it's anything which is strategic will not be left on the table just because the margin is expected to be. If we believe we can deliver and add better value to the customer, we'll go ahead and do that.
And is there a change in the way the deals are being structured right now in terms of the overall payments, let's say, or anything in terms of the value of the deal, how they're trying to bunch up the AI and other elements as well into the contracts? Is there any change in the nature of the deals and billings?
Nothing specific to call out immediately.
Okay, so nothing specific to call out in terms of the differentiation of deals, but coming back to work has been a big talking point across all IT industry, and there have been a few reports talking about how people have been forced to come back to work as well. What's the level of people who are working from office right now, and is it expected to go up further?
We have seen a big increase before the holiday, December holiday, and I expect that momentum to continue. Okay, and yes, we are at about 65% today, and I expect that number to go up.
And we're talking about how, artificial intelligence or Gen AI is expected to have an impact on workforce, not in terms of volume, but the nature of the deal. And you're doing a lot in terms of training your employees as well to get equipped with the power of this generative AI. Talk to us a bit more about that in terms of what's the entire workforce that is already equipped, what's in the pipeline.
So last quarter I reported 100,000 in basic Gen AI skills, this quarter I will say 167,000 that number has gone to, and now we also started building the next level of skills, and that is about 14,000.
Okay. And does it come with any additional costs in terms of L&D, or this is again par for the course?
See, all our margins are after the investments which we do, and probably a result of the investments which we do, and they are all baked in.
Okay. Any other monitorables that you're watching out for, Samir? Because in terms of the demand environment, at least the headlines that we read are getting better. Is this something that you are hearing a lot more in your client conversations?
So right now we also are keeping a close eye on it. We are optimistic things will improve from here.
Okay. And last question before I let you go, the same question again that I posed to Krithi and NGS. If I had to ask you to rate demand environment right now between 1 to 10, where would you rate it?
I'll not get into it right now.
Okay, I'll let you go on that note. Thank you so much, gentlemen, for making time and speaking with ET now.
Thank you.
With that, it's back to you guys in the studio.
We'll pick it up from there. Anisha, thanks for, highlighting and that in-depth conversation really coming in with the TCS top brass here. The takeaway seems to be that clients pretty much are in wait and watch mode. But yes, things are looking up and they hope to better the order pipeline, which remains intact as of now. BFSI scale up, that's what they're aiming at first. That's TCS in trade for you. 37.35 is where it shut shop in trade yesterday, but seems like IT is headed for some big gains this morning. Sanjiv Bhasin as well joins in on the show, and Sanjiv, the fog seems to have kind of lifted for IT, going by TCS and Infosys' performance. Sanjiv, you got to unmute your mic, please.
Good morning, Aisha. The fog continues in Delhi at 8 degrees. You should be here. You'll enjoy the weather. But yes, it is on the bend of clearing. You know that there is Sankranti or Makar Sankranti or Lodi on 14th. That marks the end of the sun going Uttarayan. And the sun is telling you that IT is now in a very sweet spot. Cash earnings on a 60,000 crore, 15,000 crore EBITDA, which is 25%. Where can you get a company like TCS? And a constant earner. Now, there has been attrition problem, there has been inflation, but that's settling down. I was amazed at how fast they've developed teams for the AI and so on. So I think IT is all about adaptation. And we are in a process where our companies are now, the best in the world as far as outsourcing, as far as adaptation to cloud AI. I am very, very positive. I think Infosys numbers were relatively much better than what the street was making. And I would expect from here HCL Tech and Wipro to pleasantly surprise. I think these are two stocks which are in our portfolio as a disclosure, but we recommend that you add on HCL Tech and Wipro in the large cap space.
Yeah, he's been quite bullish on both HCL as well as Wipro. Kunal, are they the stronger names within the IT pack, HCL and Wipro?
So HCL Tech definitely is a stronger one. In fact, the stock has already made a fresh 52-week highs as well as a life high, I think just some time back as compared to the other peers, which have yet to scale past. Wipro actually is a underperformer. So I think out of the two names, Wipro as well as Tech Mahindra are the two which are significantly below their 2021-22 highs for themselves. The only concern right now for many of these large cap underperforming names is the lack of momentum. And I think if post results we see momentum coming by into these names, then we could probably expect these stocks to run up exceedingly high. So yes, HCL Tech is one of the better performers out of the two names.
Okay, let's just take a look at what's really happening outside the IT sector. Well, of course, that is something that we're going to be closely tracking first up. But look at the moves on a Hero MotoCorp and Bajaj Auto yesterday. Sanjiv, clearly renewed vigor this time around from the two-wheeler pack led by Hero MotoCorp and Bajaj Auto. What's the take here?
Well, that's the charm of the rural incomes coming back, and we know that for last 2 years they've been laggards. But come and go and look at the export market of Bajaj Auto. Hero also is now having its highest figure of export. Secondly, their adaptation to EVs is telling us that they are very, very well geared for that revolution. And rural incomes marks the beginning of consumption pattern. Now the stocks have actually have been the best performing I have seen in many, many years. I still think there is more steam, but it had more or less priced to perfection. On the other hand, where do you expect Bajaj Auto to come out with a 4,000 crore, buyback and a very conservative management at that? So I definitely think these stocks are priced to perfection in the near term. But since they are in a very good sweet spot, we would wait for earnings to be the next barometer, whether the stocks are fully priced or there is more upside or downside.
Well, the aviation pack as well is in focus, and if we can just bring up the year-to-date as well as last 1 week charts for both Interglobe Aviation as well as SpiceJet. While Interglobe Aviation, of course, is the dominant monopoly player in the market, what's been intriguing is the way SpiceJet as well as a chart has been moving. Some phenomenal returns, not just in this week, which is already scaled up 7% for SpiceJet, but look at the last 6 months chart as well. SpiceJet has also seen a very, very good move, and I think about 30-35 odd % is what it's already scaled up. Of course, in the last 6 months, it's been a more exaggerated return of 116% that it's made. But remember, the stock was really, really beaten down and almost a scavenger name. But, the kind of enthusiasm around the entire aviation pack, Sanjiv, that one is seeing. Almost airports are now looking at, domestic bus stations, if I can use that terminology. And given that there are just so few players now in the market, do you think there is merit in maybe adding a little bit of SpiceJet to your portfolio?
Well, no, we don't cover SpiceJet. There are too many riddles in the puzzle over there and leverage. They are two players, so obviously it's gaining share. But I think Vistara is not a listed stock. I continue to play Indigo, but Aisha, don't miss the infrastructure. GMR is at new highs. From 1 year, I've been saying that air traffic is going through the roof. Where did you expect now a fifth, airstrip also coming along on a runway? Thirdly, play it through Ashok Leland. As Indigo expands, Ashok Leland is the bus which carries you from the airport to the terminal and to the plane. And that is only, they've got record orders. Ashok Leland has 53% of the bus market in India itself, third largest in the country. So we think Indigo, GMR and Ashok Leland is the right way of playing all these three. For no specific reason, but SpiceJet for us is an avoid.
Okay, SpiceJet is an avoid, but Indigo, GMR as well as Ashok Leyland is what Mr. Bhasin is saying. But Kunal, coming to you for your top mid-cap bets that you have this morning.
Well, it's not exactly a mid-cap, but then Geo Financial Services is something which has popped up on the radar. It's at a 3-month swing breakout high. It's managed to break past about the 250 levels yesterday. So it looks very attractive in terms of the setup, the stock finally coming back into momentum. And Reliance, of course, has been one of the key factors in terms of the price movement on the upside. So I believe Geo Financial Services could also be one of the key stocks in terms of a breakout. 262 is where I would eye the near-term targets for the stock and stop us at 247.
Okay. Sanjiv, intrigued by what's happening with Polycab and the entire wires and cables space. I mean, amidst all the rumors last evening that some of the large portfolio holders have completely exited Polycab and that the IT department is not even mentioning Polycab. Polycab is saying that they've got no official confirmation. They're not the company which is being interrogated. We saw yesterday that the entire sector saw clobbering down. I mean, be it your RR Cable, KEI, Polycab, all these stocks were down. What would you do right now? Because Polycab is also a very high concentrated HNI name.
Correct, Aisha, and that is what the problem is. When these type of rumors or unsubstantiated things come, the first thing which a foreign FI will do is sell. Forget about the news. This is generally the reaction which is there. First, take money off the table. Now, these stocks, when you want to enter them, they have a high impact cost, and when you want to exit till 20% on 2 days, you are not able to exit. So that is the uncanny part of being in mid caps, because entry and exit is always a problem. I am not going to comment on the news, because that is again something which is based. No company will agree that they have done any wrong. It will be a matter of time, and we will wait for the authorities. The stocks were maybe overpriced to an extent. The underlying business remains good. We still think KI Industries, Finolex Cables are two blue chips which you must own. KI Industry is in our portfolios. We like KEC International a lot, which is a similar, towers. And so do your homework, use this opportunity. But again, I reiterate, just now more large caps give us more presence of corporate governance, no issues, visibility. So I would rather be more in State Bank and Reliance than in some of these stocks which have already run up far in excess of valuations.
Right, Mr. Bhasin, obviously today we do have the Mumbai Trans Harbour Link also, which is all set to be inaugurated today. Anything in terms of this infra play, real estate play, because that surely, in Bombay at least is, the commute as well as is improving. So obviously in terms of that play, would you look at anything there?
So obviously, anything which goes into the construction, that is cement, steel, they become a conduit. And in infrastructure, the lion's share is with Larsen and Toubro. Anything to do with highways, electrical, hydrocarbon, it's all about L&T. And you've seen Siemens, ABB, Cummins all hit new highs, which is, I've never seen in 30 years, capex stocks of this type, pedigree hitting highs. I would still play, like I said, the funding comes from the State Bank. And if you realize what the potential is of these assets becoming now jewels in the crown, then the viability for banks lending even becomes better. I would still play this through IRB Infra, which actually owns 24,000 kilometers pan India, and on FASTag is one of the best plays. I have had a buy as a disclosure from 16, it hit a new high of 48. I still think this stock can go to 60. But do your homework, pick up some of the capex stocks which you are looking at, pick up the largest banks which are going to be the lenders, and I think you'll have a perfect potpourri.
Well, talking about FASTag, IDFC as well could be another play which could perhaps benefit. Of course, the stock has run up already. already a lot. But yeah, IRB Infra, L&T, that is the pick coming in from Sanjiv Bhasin. Of course, shortly we'll be getting our reporters as well live from the location. Remember, today the Prime Minister is going to be here in Mumbai and he's going to be inaugurating the Mumbai Trans Harbour link. And it is quite a moment, right, for all of us here in Mumbai.
Absolutely, quite a moment here in Mumbai, as well as, you know, the longest bridge in India as well. So that is important.
Longest sea bridge
in India as well. So that is very, very exciting. Though I'm worried a bit about the traffic that we may have to face, Aisha, today. Hope not, but yes, surely improving in terms of the commute over there. That's surely interesting. Kunal, you know, anything that you have in terms of a take coming in on the infra side, or anything you find exciting in terms of the charts on the infra front?
So yeah, I think IRB has done reasonably well. That's a stock which I think over the last many weeks has also managed to climb back about the 30 plus levels. Reasonably done well. I think many of the other names, for example, other than IRB, I think the entire pack as such has done reasonably well. From the Capcut space as such, I think L&T is something which looks attractive. But as a space, I think infra, many of the PSU themes they have done as per market as well as a slight above expectations. So I'm expecting that this trend for the larger sector would also continue.
Okay, can't help but notice the pre-open trade and look at IT. Infy is already seeing a 4.5% bump up, 3% uptick coming in for TCS. So today it seems like IT is going to be leading the charge on the Nifty. And of course Reliance, which has already made it to that 18 lakh crore rupee market cap club. So look out for what that stock as well has been doing, because the last two trading sessions you've seen a consecutive 2.5% move coming in on that stock. Sanjiv, you're pretty bullish on Reliance. Can investors look to buy Reliance even at these levels?
So I stuck my neck out before Diwali at 16 lakh crore. I said the market cap will hit 20 lakh crore. And by the grace of God, we've got there. Never underestimate a sleeping giant. He's just woken up. So if he's going to go, sum of parts was 3,000 now with Jio. I think now individually it will go to 3,000 plus Jio. So that is what is going to propel you to 2,200. IT stocks have given more favor to the bulls. And we are closing above 21,750 today for the week, for the month. That will be the highest close. Next week, a shot at 22,000 as banks participate. And I think that you have a perfect combination. So yes, I am very bullish on Reliance. As a disclosure, it is in our portfolio. And we continue to have that as one of the pillars of the mainstay for our portfolio. 3,000 is on the cards in Reliance over the next 4 to 6 months.
Okay, surely still bullish on Reliance. That's Mr. Bhasin's view. Thank you so much, Mr. Bhasin, for joining in with us this morning on ET Now. But let's move across, because it's day 3 of the mega summit in Gujarat, where policymakers and India Inc. leaders are committing to invest big in the state and investing much more in Gujarat. Now, the seminars will focus on MSMEs and green energy as well. Anurag Joshi is joining in with us from on ground and telling us more details on that. Anurag?
Yeah, so today is the day 3 of the Vibrant Gujarat Summit, and the focus today will be on the power industry, renewable energy and green energy. Now, right from day 1, green energy has been a very big focus of the Vibrant Summit, and several of the MOUs that have been signed during the summit have focused on green energy. And let us tell our viewers that Reliance chairman Mukesh Ambani had committed a 5,000-acre green complex in Jamnagar. So that is the kind of commitment India INC is giving to green energy. The other focus will be on the MSME sector, and you have the MSME Minister Narayan Rane who's speaking today. And besides that, the key speakers today include the CEOs of NTPC and NHPC.
Okay. Thank you so much for that, Anurag. But let's move on. And what's the cover on DC today? Seems like it's paper stocks that will be in focus on the back of price hikes by the tune of almost 1,000 to 2,000 rupees per kg across units. Let's go across to Sharad, who's joining in with us for more details on that. Sharad?
The khabar in the street is paper stocks are in focus, such as JK Paper, West Coast Paper, Andhra Paper, as what we are hearing from the channel checks is that the rate increase has been there across board units between 1000 to 1100 rupees per metric ton. Now do remember the pulp prices, they have also strengthened over the last 4 to 6 months, and importantly there is a segment called the craft paper segment. Over there also there has been an increase of almost 1 to 2 rupees per kg across categories. Now this is the second successive month as per the channel checks where the price hike has been there in the craft paper segment, and this has actually been coming in because of the higher increase in the production cost. So to order to have the spillover effect, the price increase has been there. The stocks have also gaining volumes over the last 2 to 3 sessions also, and importantly the demand in the fourth quarter of FY24 is expected to be on the higher side, especially coming in from two segments. The first is of course the office segment where the stationery segment also kicks in, and also the schooling segment where the new academic year starts.
Okay, paper stocks which are going to be in focus. Nuvama Alternative, Tata Consumer, they say, is going to be seeing inflows of around $30 million today. Flows likely to be in the last 30 minutes of trade today. But flows, of course, are going to owe to the merger impact of Tata Coffee that they undertook. But there's all that buzz around their acquisition of Ching's Secret as well. We will get you more updates on that in just a bit. But Tata Consumer as well holding up 0.5% in trade as we speak right now. In fact, I want to revisit some of the buzzers from yesterday. I want to see what Polycab is up to, what kind of price action are you seeing on Reliance Industries, and then what is happening on ICICI Bank and HDFC Bank, considering even though the Nifty Bank managed to scale up higher yesterday, these were the underperformers. HDFC Bank still absolutely flat, still stuck around that 1650 odd level, 994 on ICICI Bank. You're not really seeing any meaningful move there as well. Hero MotoCorp, Bajaj Auto, are they seeing any follow-through traction? Those stocks will just come up for you on your screens next. Seems like today they're going to get a little bit abated, not quite for Bajaj Auto, but Hero MotoCorp yesterday, considering that had a bigger move in trade. But yeah, today the big story is going to be around TCS and Infosys, and what a thumbs up and fillip they're getting from the markets this morning, because they are the ones which are really charging higher. The pre-open rates itself is indicating a gap up move of 4.5% for Infosys, and TCS putting on another 3% in trade today. There's also Tata Power, which has signed an MOU to develop a 10,000 megawatt renewable energy project in the state of Gujarat. This deal, of course, got signed on the sidelines of the Vibrant Gujarat Summit. So that is one stock